What up, people? Happy Wednesday. Welcome to another edition of Wealthy Wednesdays. My name is Kamari Ellis, and this show is the Finance Rebel. Now, every Wednesday, we do the Wealthy Wednesday segment. However, the Finance Rebel show is all about increasing your financial IQ. Why? Why is it important to increase your financial IQ and your financial education? Because when you have a better understanding of finance and money and business and wealth, you're actually able to, one, make more money, and two, save yourself some money, right? So when you don't understand your money, a lot of times you pay more money for your mortgage, you pay more money for your credit cards, you pay more money for your houses, you make less money on your jobs oftentimes. But when you begin to educate yourself, when you begin to empower yourself, you make it possible that you can take over and be the actual master of your destiny. So listen, we have to do a better job at managing our money, at mastering our money. Why? Why do we have to do a better job of mastering our money? Because there's a lot of people out here hurting. A lot of people out here suffering because they don't have any knowledge. A lot of people suffering because they listen to somebody's supposed knowledge that was actually fugazi, was bogus, was BS. I'm trying to figure out all the words to use without actually saying the words. I was told I cuss too much. But y'all know I'm the rebel, so I really don't care about that. Not really. Because it's all with good intentions. No harm, no foul. Just telling you how I feel after working in this industry for over 20 years. So what's up to people who's joining? Akil, how you doing? Tom Johnson, how are you? 4PB, how are you? Melanated Allen, how are you? You here early today, Melanated. One still learning. What's up, Eshaw? How you doing? I think this is your first time joining one of my Wealthy Wednesdays. So welcome. Miss Edith, I see you over there on Facebook. Tiffany Thompson, I see you over there on I'm messing up already, y'all. I see you over there on YouTube, Tiffany. And Go PNG, how are you over there on YouTube as well? So we're starting to get a full house. People are starting to come in. So come one, come all. While you are waiting, while we're getting things going, be sure to share this out with someone who is looking and needs to increase their financial IQ, right? Got a lot of people that need more real objective, right? Keyword there, objective financial education. Because I was telling you, I was watching some of the clips last week. So I was telling y'all that I don't really have anything for sale, right? You can go grab some merch, but that's totally on you. But I'm not here to sell anything per se, right? Why? Because I see too many of us hurting out here in these streets, real streets and social media streets, because they think they know something, but they actually don't. And then some of us actually will admit that we don't know anything. But either way, it's a lot of us walking around that don't have a good knowledge of money and how it works. So Tillman Financial, welcome. How's that Maximum doing? Mr. Bailey, how you doing? Kay Landers, how are you? Welcome to Wealthy Wednesdays. Again, I'm Kamari Ellis. Be sure to share this out. Again, I'm trying to fight against the algorithms, y'all. Y'all know I'm the Finance Rebel. I actually kind of rebel against everything. So that's, if you're going right, I'm tending to go left, right? So the algorithms don't work with me. So help me fight the algorithms, y'all. So share this out, like it, make comments, let the algorithm know that, I'm not here trying to swindle people out of their money. Let them know that I'm here doing good work, the community's work, the people's work. My man, Don Johnson. How are you, sir? Don, you be everywhere. They ain't never there. Don, I don't know how you do it, man. But I appreciate you nonetheless. I joke about it, but I do appreciate you. Just so that's clear. Miss Edith's in the house. Tiffany, you know what? I appreciate you. Tiffany, I saw you shared on Facebook before I even got going. So I totally appreciate you. Let's keep these good money vibes going so people can elevate their good money vibes to a whole different frequency. So listen, while we are going at it, while we're waiting for people to come in and file in, go ahead and throw your money questions in, your finance questions, your stock questions, your life insurance questions into the chat. If you are on IG, throw them into the question box there. I got a couple questions already in the queue. I'm going to totally be honest and transparent. I'm trying to do a better job of actually presenting some of the questions that I get so you can actually see them So I don't just read them along. Like I got one in email. I got another one in the DM on IG. There's like another one on IG that I need to get to. I'm getting to them. I'm getting to them. I promise you I'm getting to them. But I'm going to do a better job as presenting these questions. So, it could be a better experience for everybody. But while we're at it, I got a question from Tara. And Tara tends to watch pretty often. And I'm glad Jimmy's here because she mentioned Jimmy in the email. So she says, "Hi, Kamar, I heard you and JW, Jimmy, mention using life insurance as a wealth building tool. When would you do this? Question mark. I max out my 401k and my Roth. Will you just fund 401k up to match and funnel the rest into insurance? If so, what type? Variable or universal? Other podcasts say term insurance and invest the rest. Those other podcasts are, dang, you know what, y'all? I think I'm going to just start saying what really comes to mind, because sometimes things come to mind. And I don't want to say them because I don't want to be mean-spirited, because it's not mean-spirited. It's just what's coming to the top of my mind. Those of you who know me in real life know I'm not a mean-spirited person, but some of these things, like when you've been around long, I'm becoming like the old cynical old man that be walking around with his brown paper bag, just enjoying life and cussing everybody out all at the same time, right? Just being free. But all right, so just go ahead. I'm gonna keep reading this, right? So other podcasts say term insurance and invest the rest. Invest enough to self-insure. It's a lot of topics here we can really get into. I'm not going to say her age. She just gives me her age. I'm blank age. Not sure if that makes a difference. I do have life insurance at work. I'm listening to Wealthy Wednesday tomorrow. Thanks for all you do, Tara. All right. So Tara is a seasoned woman. She's over 30 and under 60. All right. So let's say it like that. And I'm only giving you that just to give you a little bit of context to understand where she's coming from. So Tara, it sounds like she's been working. But let's start at the top of this question or questions. So Tara stuck them all in there. She just snuck all of them in there. She got about 4 or 5, 6 questions in there only, maybe 7 or 8. All right. So she says she heard me and Jimmy mention using life insurance as a wealth building tool. When would you do this? All right. So that's the first question. When would you do this? When would you use life insurance as a wealth building tool? So, okay. Tara's here. All right. Yep. I got you. Hey, Malik, how you doing, cousin? Obiama, how are you? Mrs. Douglas, how are you? Gemini Favi, how you doing? Boss Man PG and Mr. Reed's here. How y'all? All right. I'm gonna sneak this question in before Tara's because it's a real easy one. Douglas, Mr. Reed says, how do you feel about buying fractional shares? I'm trying to get my kids started. I actually love fractional shares. I think it's great. It's the new cheat code. It's the new wealth cheat code that everybody can use, right? So many, many years ago, and I've said this a couple of times, but many, many years ago, you needed a bunch of money to get into the market. All right. Now, all you need is $1. One whole dollar. That's it. 4 quarters, 20 nickels, 10 dimes, 100 pennies. All right. Or $1 bill. That's all you need. Or one Susan B. Anthony. You only need $1 to start. I bought $1 worth of Apple a couple months ago, and it's now $1.40. So my investment went up 40%. Now, this is a weird year. All right. Just because it went up doesn't mean that it can't go down. It can still go down, right? There is nothing safe in terms of investing in the stock market, right? It's always a possibility of risk. But typically over time, history has told us typically over time, the stock market performs better than just about any other asset class. Now, for my folks out there, for my crypto people, somebody's going to jump out and say, well, crypto has killed stocks over the last 10 years. And it has. Will it continue to do that? I don't know. But we do know we are in a digital world, so crypto in some form will continue to be around. All right. But yes, Doug, I think fractional shares with your kids is a great way to go. You can look at an app like Cash App. I don't know how old they are. If they're old enough to have their own Cash App, but they can invest through Cash App. You can do it through Robinhood as well. But Robinhood has this weird, quirky thing where they kind of throw you on this waiting list. So when they advertise fractional shares, to me, it's not totally honest, truthful, and transparent, which I prefer in all things. But they don't do that. So just be careful. I think there's another app called M1. I've never used M1 before, so I can't really speak to it. But if you want to do it, I am always a proponent for getting children involved in the market and investing, right? Because investing is a mindset. The investing mindset, in my opinion, will set us free, financially free, if you begin to work it and massage it and keep doing it. It's not a get rich quick scheme, all right, by any means, shape, or form. But it is a mindset that works the mind and say, well, hey, is that an investment opportunity? I.e., is that a money-making opportunity, right? Because most business owners are actually very good investors as well because they understand risk. A lot of people don't understand risk, right? Risk is one of the most important things to understand when trying to make money, all right? But the investing mindset will help you develop that. We'll say, you know what? I don't want to put a dollar into this penny stock because these penny stocks have a high probability of going out of business. And so me putting my dollar into these penny stocks, by the way, penny stock is anything below $5. Me putting this dollar into penny stocks, and I probably lose. However, if I put my dollar into Apple, like the Finance Rebel did, I may have the higher probability of making a decent return. All right. So yeah, Doug, do that. Keep me updated. And with children, I say the same thing, right? I say, invest with what they know, invest with what they're interested in, right? A lot of kids love what's inside the Disney ecosystem. You got, was it like ABC, Nickelodeon, ESPN, Star Wars, Marvel. I mean, it's between Star Wars and Marvel and the theme parks. There's usually something in there, right? So if they like Black Panther, right? They like Black Panther. Maybe you buy some Disney stock. Yes, I know Black Panther is not owned by a Black-owned business. I get it. But it was still a great movie. And I think it actually helped to positively move the Black community in the right direction. But Doug, let me know if you have any other questions on that. All right. So back to Tara's question. All right. So first thing she asked again, life insurance as a wealth building tool. Can you use life insurance as a wealth building tool? And when do you do this? So when do you do this? You do it from the moment you buy the life insurance contract. It's kind of inherent in it, right? So it is Life Insurance Awareness Month. I think I've talked about life insurance on just about every Wealthy Wednesday and Wealthy Conversation Saturday as well, right? But let's just go over what life insurance is all about primarily, because there's a lot of different facets and nuance to life insurance. But primarily, life insurance is to replace income. All right. So I'm married, I have a wife, we have children. All right. I have 2 younger children, I have 1 adult child. If for some reason I'm not able to continue to make money, everybody loses. Right. So if I can't bring my bag to the household and I'm no longer here, I've transitioned onto the netherworld or whatever you believe in, I can't financially put money into the household. Who hurts? My children hurt. My wife hurts. My oldest son hurts. I'm actually a grandfather too, y'all. So even my granddaughter hurts, right? Because they miss out on all that potential. So let's start right there, right? How are we thinking about wealth? Wealth isn't necessarily $1 million or $1 billion or just like this infinite bag of money that's somewhere, right? Wealth really is about time. Now, I don't want to get too philosophical on y'all today, but to me, wealth is really about buying your time and having more time. But it's also about making sure your children can buy their time and fulfill their God-given gifts, abilities, and talents as well. And again, this is me, the Finance Rebel. This is just how I feel and think about it all, right? So with my income missing from the household, will my children be able to go to college? My daughter dances. She's into dance. I don't know if she's going to do it for real, like real for real. but she's in the dance, right? So if she wants to go that route while I'm here, would I support her? Absolutely. While I'm not here, I probably can't do that. So boom, that's potentially a detriment to her overall wealth. She could be the next. Oh man, what's the lady's name? Judy Jameson, Alex Haley. Like she could be of that ilk potentially, right? And I'm no dance recruiter or anything like that, but if that's what she wants to do and that's what she wants to dedicate her life to, I could at least attempt to give her the opportunity to pursue that. See, a lot of times, excuse me, a lot of times in our communities, our children, a lot of times don't get a chance to explore those opportunities. We don't talk about it. I haven't really figured out how to talk about it. I'm gonna try to talk about it now, but we don't. A lot of times we don't have the ability to go after those opportunities of, say, dance. My son says sometimes he wants to go to Japan and be a gamer and do illustration and anime and all that. Well, at least when I was coming up, Black kids ain't talk like that. Anything like that. We danced, and I think only a select few of us actually kind of really pursued the dream. But I think had we had more focus and more understanding and obviously more money to do that, I think that would make a big difference in the quality of life in the Black community. All right, so listen, y'all know when I'm talking about money and I'm talking about wealth, I'm not talking about money and wealth from a materialistic standpoint. I'm talking about money and wealth from an infrastructure and self-actualization standpoint, right? How can we become better? How can we be great at whoever we are, right? So going back to the question, when does it become a wealth building tool? It's a wealth building tool right away because it at least, right? And again, there's different levels of life insurance. You can opt in for $10,000 death benefit, or you can opt in for $1 million death benefit, and sometimes even more. So you have to consider all those things. But when you do it and you do it right, for example, I tell people that have children, you should all have about $1 million worth of coverage at minimum, because in that way you can guarantee almost a $50,000 income stream forever in perpetuity, right? That gives opportunities. I ain't talking about going to buy a mansion, buy a Bentley, buy a Maybach, buy a big chain or some other luxury designer brands. I'm just talking about survival, pure survival. All right, so life insurance can give that. Now, just to let y'all know why I'm qualified to even talk about life insurance. There's a boatload of people that have brought a bunch of life insurance from me years ago. I used to be licensed. I'm no longer licensed because the process drives me crazy. Underwriting is a pain in the tuckish. So that's why I chose not to continue in that vein. Matter of fact, I let all my licenses go. And that's a whole other story, but just being totally honest and transparent. All right. So next question. I maxed out my 401k and Roth. Dope. That's great. We need more people doing that. Please tell more people to save and to save for their retirement and to save, right? Because what she's talking about is she's got a 401k and a Roth. Now, I don't know if her Roth is a Roth 401k because they do have Roth 401ks at jobs now, or she's talking about just a regular 401k. I believe the max contribution is $19,500. All right. But either way, she has what I call tax diversification. So you shouldn't have all your accounts in tax deferred or tax advantage accounts. And you should have some in regular personal income or individual accounts. So you have tax diversity. Some will grow tax-free and some won't, but you use them for different reasons. Give you an example. I'm a big fan of 401ks, right? And I'm a big fan for people putting money into their 401ks because most times people will get a match from their employer for the 401k. So many of us forego getting into the 401k, enrolling into the 401k, and we don't realize that we are missing out on free money. All right. So I tell a lot of people to do it. However, there are some occasions where I tell people not to do their 401k. Now, here's one. This is just one, right? Remember, every Every situation is custom made. It's tailored. It's like a suit. It's for you. No one else. There's no such thing as cookie cutter information. That's why I don't like some of the big boggleheads out there that have super large platforms, because they'll tell you things like buy term and invest the rest. Well, what if buying whole life might be better for you? And what if you have the money to buy a whole life? But all right, but I'll come back to that. But I will tell people not to buy or not to invest in a 401k plan if they don't have a good amount in savings. Why? Because if something were to happen, if an emergency were to come up, the only place they have money at is in their 401k plan. And a lot of times when you're not an employer, it's a bear to get it out. It's really hard to get the money out. And so oftentimes when you go to get the money out, it comes with tax implications. Listen, I tell you all the time, taxes are the greatest enemy to wealth. Taxes are the greatest enemy to wealth. And so we don't want to be hustling backwards by putting money in something when we really can't handle it. So, if depending on, again, the person's situation, I might have them put half in the savings and half in a 401k plan, or put it all into a savings plan until they get to a good level where they're comfortable, where I feel that they can handle most of their issues if something were to arrive. Or, as y'all know, I don't like the term emergency fund. I like the term opportunity fund, right? So if an opportunity were to come about, they could also take advantage of it as well. All right. So going forward with Tara's question, she said, would you just fund 401k up to match and funnel the rest into insurance? All right. If so, what type? Variable or universal? All right. So it's really hard for me to answer that question, Tara. I would need more info, and probably you want to have a offline conversation about that, because I'm not trying to put all your business out here on these social media streets. But I'll say this though, I still like you matching or putting or maxing out your 401k plan. But it really depends, right? To really answer this question, it really depends on what your life insurance needs are, right? I don't know if you have children. I don't know if you have grandchildren. I don't know if you have a husband. I don't know if you have a house. I don't know any of those things, right? I don't know if it's just you. Oftentimes, especially with black women tend to carry the burden, y'all. I'm just giving y'all the facts. Black women tend to take care of everybody in the family. And don't let it be a black woman that's been to college, makes a couple of dollars, and that can, hold her own, and she's Miss Independent. She oftentimes becomes the backbone of the family, money-wise. And by doing so, oftentimes she does not take care of herself. She does not plan for her retirement. She does not plan for her savings. She's just taking care of her folks. I see it time and time again. So if you are that black woman, please don't be that black woman. Please prioritize yourself, because listen, if you don't take care of you, nobody else can take care of you. All right. So just keep that in mind. All right. So going on to the next type, variable universal. Again, I don't know, because I don't know your situation. I will kind of give you some cut and dry, right? So let's go over the basics of life insurance types. And there's basically 4 types of life insurance. There's term insurance, which is the cheapest form of life insurance. It does not generate a cash value. There is whole life insurance, which is like the Cadillac or the Mercedes or the Maybach of life insurance. It does generate a cash value, and it is the most expensive form of life insurance that's out there, right? Now, Tara mentioned variable and universal. Those are the two that are kind of in the middle. They both develop cash values. They just invest a little bit differently, right? Because within life insurance, you have your cost of insurance. So you have your premium, right? I mean, step back. You have your premium. All right. And let's break up the premium. So inside your premium, you have your cost of insurance, right? That's the money that's going to take to bury you and make sure the life insurance company is able to continue to do business. All right. Because life insurance companies are here to do business, people. I'm here to tell you. But then the other portion of it is the cash value amount. that is in your, and that's not the right term, but it's basically two separate cost of insurance, and then there is, let's just say, cash value amount, right? So the cash value amount kind of goes into a separate account and it'll grow. So you have that with variable and universal. Now, what happens with the cash value, and matter of fact, let me know if y'all follow me. Y'all follow me as I break down this life insurance. Type a yes. Type a no if you're not following along as I explain these life insurance concepts to you. All right. I see some new people here. I will definitely acknowledge you in a second. All right. So you have, again, two separate portions of your life insurance premium. You have the cost of insurance portion, and then you have the cash value portion. Okay. So the cost of insurance goes to making sure your policy is whole and that they'll cover you and get your family whatever money they're supposed to get whenever you transition on to the upper room. All right. And then the other portion of that premium, by the way, the premium is the payment. The other portion of that premium is the cash value amount that will go into a separate account and that will grow tax free. All right. And there are techniques to pull it out tax free over time. Now, variable versus universal, two difference. Variable, you can invest it in different things. You can invest it in the stock market. You can invest it in money market. The variable portion or the variable type of life insurance is kind of like a 401k plan to a certain extent. All right. And then you have universal. Universal, same thing, except where the money goes, the cash value goes, it goes kind of into an account that's more like an investment, more like an interest-bearing account. Again, the universal is more like an interest-bearing account where people can put money and then it will grow. All right. So again, depending on what you do, what you want, what your expectations are, you could you could go either way. You can go either way. The variable and the variable is the most flexible. All right. The universal has some flexibility, but the variable is it has the most flexibility. Whole life has some flexibility, but not a lot. Term don't have no flexibility at all. All right. You pay the premium in term. You're about talking about those two different portions for those cash value life insurance plans. Term don't have that. There's no cash value. Now, there might be some new forms, right? Because life insurance is always evolving, right? And I know there's like some return to premium policies out there and things like that. So maybe one day they'll come up with a cash value. Okay, so Jane Jordan said no. Tara said yes. Hey, Katisa, how you doing? Welcome back. Yes, Tiffany said yes. Okay. Jane, tell me what part I missed you on so I can rewind and catch you back up. So term, again, does not have a cash value portion. All right. So that, again, it really depends on what you're trying to do. When I'm talking about life insurance types, right? And I'm reading the email, so that's why y'all don't see me looking directly into the camera. So forgive me. It really depends on what you want to do. Like, do you get really spooked when you see the stock market go up real high or down real high and you see your 401k fluctuate? Because your risk or your risk tolerance or how well you deal with the fluctuation of money will also have a big part in which type of life insurance you pick. All right. Now, other podcasts say term says buy. So she says term insurance and investor risk. So the term is buy term insurance and investor risk. And that's absolutely stupid. I'm going to tell you why. There's a difference between theory and application, and most people don't know the difference between the two. Now, buy term and invest the rest sounds sexy, right? You buy the cheapest level of term, you take the difference, and you put it into the stock market. Most times, that's a strategy Primerica made very, very popular. And this is not sponsorship of Primerica or an ad for Primerica. I'm not really a fan of Primerica. No diss to anybody that does Primerica. I'm just saying. But that philosophy, while I will give Primerica props, it has at least helped educate a lot of people, a lot of Black people about life insurance in general. It's very, very limited. All right. It's very, very limited, and it's only for people who are on a limited budget. All Black folks ain't poor. Here to tell you, all black folks are not poor. Okay. And you do a disservice by offering just kind of a cookie cutter off the rack type solution. All right. So invest term, buy the rest. So they say buy insurance, term insurance, because that's the cheapest form of insurance to cover you. Term insurance only covers you for a short term period. For example, I just bought a 10-year term policy. It's going to expire in 10 years. And this actually happened to me before. It's going to expire in 10 years. And if I don't convert before the 10 years, it's going to skyrocket to an astronomical amount of money. And I'm probably going to be mad and cancel. But what happens with term actually, I'm trying to think of the term. When you stop paying your policy, it cancels out on its own, but that's not the actual term. But what happens is when people stop paying their policies, they get canceled out. You lose coverage. Sometimes you can get it back. A lot of times you can't. Most term policies kind of self-cancel because people stop paying the premium. Term life insurance is the most profitable form of insurance that insurance companies write, because they never pay out on it. All right, they never pay out on it. And here's the other part. The other side of that coin is invest the rest. How many of y'all know people that have the discipline to actually invest on a consistent basis? To invest on a consistent basis. How many people do y'all know to do that? So then the strategy falls apart. Again, I tell y'all this all the time, there are no bad financial products. There is just bad strategy. Just bad strategy. Term insurance has a place. Whole life has a place. Variable universal life has a place. Universal life has a place. They all have a place. But you got to understand your financial puzzle in order to kind of make it fit where it needs to fit for what you need it to do. Now, if you're coming from the mud, you don't have a whole bunch of money, I'll tell you in a heartbeat, get as much life insurance you can in turn. But guess what? If you're making some money and you're consistently making some money, it probably is a good idea to look at some cash value life insurance. It just is. So it just depends, Tara. I hope, thank you, Robert Lewis. Thank you, lapse. I don't know why I couldn't remember that term. Yes, the policies will lapse. All right. And so when the policy lapses, your coverage is canceled. All right. Thanks. Shout out to Robert Lewis, our resident mortgage agent. I kind of have Robert on from time to time to talk about mortgages, to talk about the real estate market. Robert, we got to do something soon. I know we keep saying that, but we got to get it together, brother. All right. So, that's kind of the ins and outs of life insurance. And it sounds like, again, you're looking at life insurance, partially for potential coverage if you pass away, partially potentially also as retirement, because you asked some retirement questions about maxing out and not maxing out, Roth versus insurance, Roth versus insurance. So let's talk a little bit more about that. Send me another email. Maybe we can do a call. But I'll just say this. One of the things you also want to think about, and I just want to tell the audience, is life insurance is great. It is not a short-term fix. All right. A lot of people are out here selling life insurance and call it your own banking, but they're not telling you about what's called surrender fees. So when you put money into a cash value life insurance policy, if you put $1 in today, you can't pull that same dollar out today. You may only be able to pull out 70 cents. All right, well, let's make the numbers a little bit bigger. If you put $100 in today, you may not be able to pull out $100 a day. You might only be able to pull out $70 in value, right? So that's a 30% haircut. And usually these life insurance policies have what's called a surrender schedule. And so each year it kind of goes down, the penalty for pulling your money out. So in year one, it might be 30%. In year two, it might be 25%. So the $100 you pulled out, in year two, you can now get back $75. So, if we go to year three, it might be $80 you can pull out. In year four, it might be $85, right? All the way down to, let's say, year seven. Year seven, you might be able to pull out your $100. So again, if you take anything away from this, right, Remember the four terms of life insurance, right? You got term, cheapest, no cash value. You got whole life, most expensive. Actually, that pays the highest commission to their salespeople, life insurance salespeople, certified, or excuse me, life insurance salespeople and financial advisors and planners. All right. And then you kind of have the two hybrids in the middle. You have variable universal life and universal life. All right. And remember, if you're doing cash value, it's not a short-term thing. It's not a quick. It's not a get rich quick scheme. Help me out, y'all. Maybe I need some water. Oh, that one's just about done. All right. It's not a get rich quick scheme. It is for the long term. All right. So people will have a whole life policy for 10 and 20 and 30 years, 40 and 50 years sometimes. And then, God forbid, they take it home to their maker. That's when the family gets the benefit. Now, I'm going to say this one last thing as it relates to our community. I know a lot of people have a bad taste in their mouth for life insurance because the way life insurance was sold, many of our people got abused and taken advantage of, right? You'd be like, Nana had this policy that was a $2,000 policy and she paid $5 a week on it for 30 years. Well, part of the reason was because Nana never reevaluated her policy. You know, Pop-Up got this policy because he just wanted to have enough to be buried with, right? And oftentimes we're not thinking about inflation and we're not thinking about legacy and we're not thinking about generational wealth. And so when you start to think about those things, your approach to life insurance, your approach to money, your approach to finance all changes. All right. So again, there's no bad financial tool. There's just bad financial strategy. All right. So Tara, again, hit me up and I will try to connect with you to give you a little more clarity because I wanted to talk about this. Now, there was another question, and then I'll come to you all's questions. There was another question that I got concerning Mr. Buffett, the CEO of Berkshire Hathaway. If y'all don't know who I'm talking about Mr. Warren Buffett and his cash levels. So give me 1 second. I wanna pull that up and just talk about that real quick. That came from my man Tyrese on IG. Give me 1 second. Oh, and of course it's on the site with all the ad pop-ups. So give me 1 second. But listen, if y'all have questions, listen at me. My grandmother would have a fit with that in proper English. If y'all have any questions, throw them in the chat. I'm gonna get to them. Y'all know I do. I said I wasn't gonna be on here that long. But it's already 44 minutes in. These folks. I hate this site. So let's see here. Give me 1 second. There we go. All right. Can y'all see this? Warren Buffett, Berkshire Hathaway has a record $137 billion cash pile. Here's why the investor will be frustrated by that fact. And so Tyrese asked me, why would Warren Buffett have so much cash? Wanted to know what is the point of all of that. And so I said to him that the reason why he has all that cash is because Warren Buffett is in a class all of his own, right? The man is the bank, right? So he can't buy little piddly $1 billion deals, $1 billion companies, right? I know that probably sounds crazy. Like, what do you mean $1 billion? Well, he got 137. He's literally whale hunting, as some folks say in the sales industry, right? He's looking for big deals. The last deal I can remember offhand was the one where he bought the train company, and I forget how many $1 billion of that he owned. Let me see. And then I know he brought another deal not too long ago. But again, he can't really, it won't impact his numbers, right? It won't impact him at all. So let's just look at this real quick, and I'll look up some other stuff too. So Warren Buffett's Berkshire Hathaway has a record 137 billion with a B, y'all, in cash at the end of March, right? They report these things in quarters. I'm sure that will be updated soon. The famed investor always holds some cash to weather emergencies, as everybody should, and capitalize during crisis. So this is how you should try to pattern after the rich, not necessarily after building up multiple streams of income. We'll come to that later, though. However, Buffett dislikes having too much cash because it loses value, right? You're right. When you have money sitting on the sideline, you lose the potential you lose in that. It's not, you don't always want to have money at play, but 9 times out of 10, you want to try to have as much money at play as possible because it's an opportunity cost, right? When you don't invest it, it's not working. You lose the opportunity to make money. All right. So Peanut Brittle, that's a letter. By the way, I would suggest everybody read Warren Buffett's Berkshire Hathaway, his annual letters to his investors. They're very insightful. They give you something to think about. And they will definitely help you grow as an investor. Long-term investor. Warren Buffett is a long-term investor. He does do some other things internally that's a little fancy, but he's Warren Buffett. He can do that. So it says those treasury bills are paying those treasury bills are virtually paying nothing. He said they're a terrible investment over time, but they are the one thing that when opportunity arises, we can use to pay for those opportunities. The rest of the world may have stopped. So treasury bills are short-term bills, 2 years, 6 months, things like that. They might pay 0.5% interest, if that. So you really don't get anything. He doesn't want to lock his money up because if he locks his money up in something longer or more risky, right, he then misses that opportunity, or the money may lose value because it's in a more riskier asset. So what he's doing is he is doing what's called capital allocation. Now, capital allocation is the real tool to getting wealthy. Capital allocation just basically means where can you put your money to get the best bang for your buck without trying to lose your shirt. But that's a whole other process. Now, here it says cash is not king. That is a lie. Cash will always be king. All right. Buffett prizes having emergency and plenty of dry powder. Dry powder, again, is cash, being able to use it, fire it off whenever they want during a downturn. However, he still dislikes holding too much cash. Again, it's kind of nuanced. And I'm trying to see here if they mention his last deals. Because again, he only goes well hunting. Again, the last thing I can remember him buying was CSX. And I know he brought a piece in Heinz ketchup. But again, he's holding a lot of cash because he can't find anything good that's of great value, right? Because that's the other part, right? He can just go around and buy stuff if he wants to, like a kid in a candy store. But what usually happens to a kid in a candy store that's let loose with unlimited amount of money, $137 billion, and they can eat all the candy they want? Kid usually gets cavities, right? More than trying to get cavities at this old age. He's trying to find good companies that are undervalued or at least fairly valued that he feels he's getting a good deal on for his money. So that's why he is holding it out. All right. So I see there is another question on IG. There's a couple of questions on IG. All right. So let me bang through those, and then Facebook and YouTube, I'm coming right to you. All right. So one still learning. Swahili Queen Esau asks, can you purchase and be the policy owner of life insurance for a non-relative? Yes. The rule for buying life insurance is you have to have an insurable interest. So Esau, let's say we went into business together. We're not related. We're not dating. It's just strictly business, right? We're not married, because wives automatically get insurable interest. They already have an insurable interest because my life is of value to them. If I was somebody's baby daddy, my life has value to them, right? I have an insurable interest, all right? But if we are in business together, we're not related, and we're going to business together, you would have an insurable interest with me. I would have an insurable interest on you, and we are not relatives. So if I'm a key person in that business and I pass away, and let's say I'm the rainmaker and I get business to come in all the time and I just make it rain, and I die, I transition, that leaves you in a lurch. So you could have an insurance policy to do a lot of things, to make you whole, keep the business running, potentially buy my wife's share of the business. It's used for a lot of things. That's called succession planning. A lot of times when that happens, I don't know if anybody saw the video I posted with Tiffany Bacon from an interview I did on WRD, but I talked about it a little bit. But succession planning is planning that should take place in all organizations and institutions, right? It's basically, what is the plan when certain key people leave? Or actually, what is the plan for the organization as key people pass away, as the organization or membership ages? Like, how are you going to keep this organization thriving over time? And sadly, a lot of Black organizations don't do succession planning, and they need to do it. All right. You're welcome. My pleasure. Thank you for being here. All right. B Barbie 2 says, I currently have a universal life insurance policy. Okay, so you must be insurance. Do you think I should convert that to a whole life? B Barbie 2, I have no way of knowing that. That's one of those I would need to know like all your business in order to give you a real recommendation on that. Listen, here's a secret for y'all. Cheap salespeople will say, yes, go get a whole life policy. You know why? Because they just want to sell you a whole life policy. They just want to get that commission. There are a lot of people in there. Again, there's no bad policy. There's just bad strategy, and sometimes bad people passing off as their strategists. But it would really depend. I don't know what kind of business you have. I don't know if you have any type of retirement plan installed. Oftentimes inside, if you have a business and you have a retirement plan, you can own a life insurance policy inside of your retirement plan. It just, again, there's so many factors. And again, I don't know what you're trying to do. So it's hard for me to answer that question. I apologize if I'm not giving you what you want, but I'd rather keep it real with you than just try to give you something just for the sake of giving it to you. All right. So Big Bear _79, you say, do I need to incorporate before I can claim renovations, etc. on taxes for a rental property? So no, there's a big myth out there. Matter of fact, I know. I just shared another video, right? Listen, y'all got to stay up to tune on my YouTube page. Matter of fact, everybody do me a favor. Subscribe to my YouTube channel. I put out a lot of good stuff. I recognize that I'm not one of the quote unquote popular gurus, nor am I trying to be. But there's a lot of good valuable things on there. I interview a lot of people who have great wisdom, great experience. So do me a favor, go and subscribe to the YouTube channel. There's a lot of things over there. And what led me to that was I just shared a clip or a snippet from an interview I did with Tony Moore, who's a lawyer here in Philly. Tony is a woman. All right. And we're talking all about LLCs. And so there's a lot of misconceptions out here, and people saying you got to get an LLC. You got to get an LLC. It drives me and the rest of my Black tax cohort crazy because they're saying you got to get an LLC, but you really don't. And again, LLCs aren't bad. S corps aren't bad. Partnerships aren't bad. Corporations aren't bad. Again, there's just strategy. It's the best strategy for you. You can be an individual with rental property. I have a lot of rental clients, and they deduct all their expenses, all their property. They deduct all their property that they buy. They do what's called depreciation, which means you got to spread out those expenses over the life of the asset. Not trying to bore y'all, but I do see a lot of people not file for their depreciation or not write off their depreciation. And it leaves them paying way more in taxes than what they should, and actually not following the law. because the law says you got to rent a property as opposed to depreciate the property. So no, you don't need to incorporate before you can claim renovations on taxes. You do have to capitalize them, right? You do have to write them. You do have to depreciate them. So that basically means you can't. Let's say you put $100,000 into a rental property this year, you don't get to write the entire $100,000 off in this year in 2020. You got to spread that out more than likely over 27 and a half years, which will take you to 2047 and a half. All right. I hope that answers your question. If you got more, just let me know. Yeah, got that one. All right. So who's checking in with me? Who's here with me? I know Melanated Alton's here. Lady T Boss 8's here. Welcome. Okay. I am Kiana's here. How you doing, Kiana? Where you been? I've been looking for you. I teach finance. Thanks for joining. Mid-Atlantic, how are you? How do I feel the election will affect the stock market? I think it's going to be crazy. I think there's so much misinformation going on out in these streets, especially by Republicans. I have no problem sharing that. It's just a lot of lies. And by the way, I'm no fan of Democrats either. I'm black. Malcolm X told me that neither one of the parties are good, and he's been right so far. But when you present this argument that the Democrats are so bad and the only option is Republicans, I look at you side-eyed. I look at you like you haven't done any history. I look at you like you can't read and you haven't done any research, because they're both bad. Same size of the coin. Yes, B. Barbie, I do consulting. Yep. Just hit me in the DM and I'll send you a link. We can set up a time. Who else is in here? Sal Chai Hansford. Sal Chai Hansford, how are you? Hope I didn't butcher your name. My pleasure, B. Barbie too. No problem, Big Bear. Soul G_W, how are you? Thanks for joining. All right, B. Barbie agrees. All right, we are in accord, people. That's what we need. That's what black folks need. We need some unity. Forget all this other stuff. Once we get some unity, we'll be able to do a whole lot of things. Conventional and unconventional. But I'm not going to hold my breath for that. All right. So let's see. What questions do we have here? All right, my man Don Johnson's living a life. All right, Ms. Edith share. So listen, if y'all all have not shared this, please share this out with your whole family, with your whole Facebook family, with your whole Facebook friends. Let everybody know that the Finance Rebel's here. And I see a lot of people talk about they giving out free game. Tell them I'm giving out free game. I actually don't like that term, but it is what it is. Oh, my pleasure. All right, Don says brought $4 worth of Amazon, Microsoft, and Johnson & Johnson. Oh, my man Don out here killing it. He making it rain for real, y'all. He making it rain for real. So brought $4. So was it $4 a piece, Don, or was it $4 on each one? Either way, that's a boss move. Amazon's a great company. Microsoft's a great company. Johnson & Johnson is a beast of a company. Now, Microsoft, yeah, I think Microsoft makes more than Amazon. I think Microsoft makes the most. But Johnson & Johnson ain't going nowhere, and neither is Amazon. Hey, Angela, welcome. Happy Wednesday to you, too. Thank you for checking in. All right, Don says, I'm a user in one, and it's a great platform for long-term investments. If I were to start over, I would have all my money there. Okay, good to know, Don. It's about owning your time and space. Shout out to Jimmy and Corey over at By the Hood. Jimmy was here earlier. I don't know if he's still here or not. Jimmy, I'm actually mad at you now that I think about it, right? Because they came on, they did my Saturday segment. I need to have them back on, right? Because we're always talking about own your time and space, but we didn't get into the book at all. And it's funny, Don, I was just telling Jimmy that I want to start talking about own your time and space on our Sunday show. So for everybody who doesn't know, we do a Sunday show called The Black Wealth Project every Sunday at 7 p.m. Again, every Sunday at 7 p.m. Because the concept is great. I mean, we all should be striving, or the title is great, talking about the concept, right? We should all be striving to own our time and our space. Okay, Miss Edith's talking about Misty Copeland. Absolutely. She's going back to where I said that I should be able to afford to take care of my daughter as she pursues her dreams. All right, IG, we have hit our hour mark. I have 35 seconds left. Listen, if you just came in, if you've been here for a while, come right back. I'm coming right back. I'm going to end it now, but come on right back. Breezy, J Shops, Andy, come on right back. Two wings of the same bird, absolutely. So come on right back. I'll be right back. While everybody is waiting, keep putting your questions in the comments. I'm going to stay on a little bit longer. Been on for about an hour. I haven't ate yet. Y'all know I got to get my vittles. But y'all know I'm committed to doing this every week. Now, I've been thinking about actually starting to come on live more often. I want to do more teaching, more education. I mean, honestly, if I could do this every day, I would. I absolutely would. Some of my clients aren't be mad at me though, right? So that's always the rub. That's always the rub. Finding enough time in the day to make everybody happy, which is impossible. All right, so we are live again. I don't know what's going on. There we go. We are live again back on IG. We are live on YouTube, and we are still live on Facebook. Yes, and I am a major fan of Misty Copeland. Yes, the first Black principal dancer at the American Ballet, Misty Copeland. Misty is dope. And she started late in life, right? I think she started at 13. Usually that doesn't happen. So Don says Roth 401k is maxed out. White Roth's maxed out. One more payment for my IRA. Don be on top of that bread, y'all. Pay attention to Don. All right, Ms. Edith, what we talking about? Student loan. Okay. I believe taxes and student loans are the worst. All right, so I'm gonna be honest with y'all. I am not in the anti-college camp. I'm Black. I don't believe Black people can afford to be in an anti-college camp. And that doesn't mean that I think all Black people should go to college either. That's not what I'm saying. What I'm saying is I'm not out here actively saying that college sucks. I think the way we promote college is wrong. I was a little bit different. I went back to school when I was like 25. Like I went back late, graduated late. Because I did go when I first got out of high school. I wasn't mature enough yet. Just being honest. I wasn't serious. Just being honest. Right. And so society says, yeah, when you get out of when you get out of high school, you should immediately go to college. Nah, I think that's a bad tradition that needs to be changed, that needs to be challenged. I think children, when I say they should go when they are ready. They should go when they can really maximize the opportunity. So, I don't subscribe to that. And again, when I say I'm Black, we're Black. When you look at the key positions in society that dictate society, that drive society, right? You got engineers, you got architects, you got doctors, you got lawyers. They all require degrees. Will that change in the future? Maybe. But when you look at all those fields, they all have underrepresentation from Black folks. And historically, when Black folks are in fields that we've been abused in, oppressed in, we tend to make things better. Look at all the stories in healthcare, right? All the stories in healthcare. A lot of Black women have babies and never make it home. Sadly, in 2020, y'all, crazy. All the health disparities. I mean, I think we really had to start thinking a little bit deeper about some of the stuff we accept. we have to think a little bit deeper about what the implications are, not just the emotions of the situation. Listen, I get the emotions of the situation. Yeah, I do. Y'all hear me? I be around here cussing all the time. All right. So, just I just would ask everybody to think a little bit differently about it. And so when I say student loans, I don't necessarily have a problem with student loans is because oftentimes, sadly, because of the position we are in as a community, we don't have big funds to pay for our children to go to school. But wouldn't it be awesome if everybody in the neighborhood put in $25 a quarter to send the kids that are really bright to college? If we made it more of a community, if we went from I to we could solve that problem, But I mean, if we want to follow the quote unquote American traditional way of being rugged individuals, which is a lie, right? Because every big wealthy family, wealthy business had help. It was done with cooperative economics. Look at the banks, look at hedge funds, look at insurance, look at mutual funds. There's a pooling effect. Everybody does it. We are the only people that get demonized for just talking about it. Yes, Miss Edith, the black woman does take care of everyone. I'm just telling facts. But just think about all those things, y'all. All right, so Jane, you said you weren't following me when I was talking about life insurance. Did you follow up with a question so I can get back in your good graces? I don't want no beef. Rhonda Cox asked me, what is a good 5G tech stock? You know what, Miss Rhonda? I don't know. I know Apple's about to do a rollout for 5G. They're definitely going to be taking advantage of 5G. Listen, I don't know if 5G causes cancer or not. I don't think 5G causes COVID, but listen, you never know. Lord Hughes, how are you, sir? Thanks for joining us. Good evening. What do you think about ETFs? I love ETFs. Some people even call me an expert or guru. I never call myself an expert or a guru. But people do, and I allow. It's a compliment. But what do you think about ETFs? Yes, I love ETFs. They're great. They're better than mutual funds. I tell people all the time, don't buy mutual funds, buy ETFs. There are a few mutual funds that are specialized that aren't really covered in the ETF space, but there's not many. All right. But what do you think about ETFs that focus on online retail like iBuy and eBiz? It seems like brick and mortars is slowly dying off. Can't have Black Friday in the middle of COVID. Yeah, you can't have Black Friday in the middle of COVID, but you still got what do they call it? Cyber Monday. Walmart's still taking advantage of online shipping, right? A lot of these big retailers are moving in that direction or have moved in that direction because you can't just be bricks and mortar anymore. You kind of got to do both. So I don't necessarily have a problem against like iBuy. I don't think I've heard of iBuy though. Let me look up iBuy real quick. Give me 1 second, Lloyd. I'm going to pull it up on the screen. Our shares. All right. Give me 1 second. Un momento. Listen, while you are all waiting, put your questions in the chat. Again, I'm not staying on super duper late, but y'all know I always try to get to everybody's question. Because y'all know I need my vittles. I might pass out and faint. Listen, if I faint on screen, what y'all going to do? Y'all going to call 911? All right, so Amplify Online Retail, ETF. Let's look at the holdings. A real quick and easy place for y'all to do just basic superficial research is to just go to finance.yahoo.com. Again, superficial. So we got Overstock, Carvana, Peloton. I wouldn't consider Peloton. Well, you know what? I guess anything sold is retail, right? Revolve Group, Wayfair, PayPal, Expedia. Yeah, I guess travel. Chewy, Etsy, Stitch Fitch. Not bad. Most of it's in consumer cyclicals. All right, let's see. Wow, year to date is up 67%. It's kicking butt. Yeah, I don't have a problem with it. I don't know. Yeah, net assets a little under $1 billion. Yeah, so usually I don't buy any ETFs that have less than what's my matrix? 5 million in assets under management. Can't have like yeah. So yeah, Lloyd, I don't think there's anything wrong with that. I don't think there's anything wrong with that. All right, let me see. I got a whole bunch of comments here. Let me catch up. Mark Daniel says term insurance usually terminates at 62. Sometimes it goes longer. Sometimes a lot of insurance will stop at like. Sometimes I've seen 80, I've seen 90, I've seen 100. So you definitely got to be careful about that, especially if you have longevity in your family. All right, doing my didn't know that. I'm not sure what you didn't know. I missed it, but I'm glad I was able to give you some good info. Okay, Don's saying he just brought an energy company. I didn't see that. Don's talking about Warren Buffett. Yes, Miss Edith Lapse. Oh, Don be coming with. Let me see if I can grab this. Let's see here. Give me a second. Did Buffett buy an energy company? Let's see what we got here. Hi, son. Son, I'm gonna have you come on. I'm gonna have you come on camera one day. Would you like to do that? Say hello to everybody. Come on over here. Come on. Say hello to the people. So my son always comes in every Wednesday to get the trash ready. So just say hi. I was trying to get him to do a YouTube. Well, he wanted to do a YouTube channel, and then he changed his mind. So say hi.
Hello.
And so tell him how you be making fun of me when I be on the mic.
Because you're bald.
Y'all heard it right. They laugh at me because I'm bald.
So what box did you want me to take out?
It's right there in front of the thing. Thank you, sir. So excuse my commercial break for talking to my son, y'all. All right, so he just brought an energy company. Let me see if I can find it. Pipelines. Oh, yeah. Natural gas, I believe it was. Let's see. This is what you're talking about, Don? I didn't go to New York Times. I just Googled it, and this is the first thing that came up. Renewables, major oil pipelines. Let's see. Right. Dominion. He brought Dominion Energy. That is correct. I forgot about that. I knew about it, but I forgot about it. So he brought it for 10 billion, right? So that's part of the reason why he's got all that cash, because he's coming in with 10 billion. He's coming with 10 large. Like, this is the new definition of large these days. Right. So he plunked down 10 billion to buy gas pipeline assets and related debt. So he brought the whole company for 10 billion and took on the debt. So Dominion must be sexy. It must be special. All right. So thank you, Don. Appreciate that. Hey, Allison, thanks for joining us. If someone does not look at your entire situation, goals, financial picture, etc., they are not able to advise you properly. That's what I said, right, Allison? Did I make you proud? But listen, people will sell you a product real quick and won't know nothing about you, the boat you came on, or your mama, or your daddy. So speaking of interviews, my homegirl. Yeah, I've been talking to Rachel. I talked to her once. I was waiting for her to send me the link because I wanted to buy her book, Don. Yeah, I would love to have her on maybe a wealthy conversation. Jimmy, don't be coming in here trying to scoop my interviews. This is the Black Financial Journalist Network. Me and Jimmy are in competition. All right, 11 nuggets. Well, thank you for being here every week, Angela. I appreciate you, and thank you for thanking me. All right, share. Thank you. All right, Jimmy, you'll come back whenever. All right, yeah, because I definitely want to talk about On Your Time and Space. I don't know what's for dinner tonight, Tiffany. It just shows up. The wife is boss. Wife's God. Black woman's God, and she just mixes it up, and it's always good. Keisha Dixon. I think I'm saying your name right. Let me know if I'm saying your name right. Because sometimes I'll be reading these fast and I'll be messing them up sometimes. So thank you, Keisha. Thank you for being here. Trying to have enough money to retire in a few years. Don, I'm sure you got enough money to retire right now. You're just trying to get the double stack. Is that hyphy? There's nothing wrong with going to uni, but if you shouldn't carry your student loans any longer than the time you spend in university. It depends, and again, I'm just saying I'm not anti-college. That's all. And a lot of times we get caught up in worrying about the student loans, but then, I'll watch people go out that will say they want to go to college, but then they'll spend all their money on frivolous things. Right. But also I want y'all to know I have a different outlook on college again, because I went to college late. I don't think college is about getting a job. I don't. I think college is about refining your mind and developing your mind. And you can only really develop and refine your mind with others who are looking to do the same thing. At least that's what I've seen in all of antiquity over the years, right? You got to have people that challenge you. I'll never forget this guy, this short guy of a certain ethnicity who challenged me and would say my name wrong. And it was in a sociology class. But it really made me grow, and it made me grow a lot. I failed this class the first time, came back, took it again. We wound up becoming wonderful, almost friends to a certain degree, but we had a wonderful rapport. And so again, I think if you're just going just straight for a job, I think you're missing at the battle. By the way, that is not job shaming. That's not what I'm talking about. Jewish Phenomenon is a great book on how the Jewish people came into power, and education was a large part of it. It was absolutely a part of it. And so people get mad at me because I use the Jews as a reference. I use the Jews as a reference for Black folks worldwide, throughout the diaspora, right? Because the Jews aren't just synonymous to one country. They're throughout their entire diaspora. And I'm not going to get into all the other stuff and the deep stuff with them. I'm going to stay pretty superficial with Jews. I'll say that Black folks are the original Jews, or the original Hebrews. That's documented. There were Jews in Ethiopia for a long, long time. But I'll say this. When you look at what they did, the term ghetto is actually an Italian word to describe Jewish neighborhoods. We've adopted it, right? And the Jews were the outcasts of Europe. They couldn't do anything. And they found something that they can get into. A lot of them were merchants. But the one thing is they kept their culture intact. They teach their culture throughout everything. They don't run away from their culture, the good, the bad, or the ugly. Now, again, we could argue about some other points, but that's not the overall point that I'm making here. The culture that they rock with, they embrace it, they enforce it, they rock with it. Just imagine if we did some of the same things. They buy with each other, they shop with each other, they support one another. Can we have our own Black version of a bat mitzvah and a bar mitzvah, where they're giving these kids all this money for their future instead of buying them all these toys, right? I'm just saying. But no, I don't want to be them. I want to be me, an African descendant. That's what I want to be. That's what I am, right? But I do think we can learn from different people and take it and put it into play for our own benefit. All right, Don, get me off my soapbox. Somebody come rescue me. Calgon, come save me. Imagine if we had an institution that met on a weekly basis, maybe Sunday. They had a college fund for the neighborhood they represent. Yeah, Don, a lot of Jewish people have Saturday school. A lot of Chinese people have Saturday school. A lot of them have after-school programs for their children that go to public school to make sure that they get their culture, and then they support them as well throughout life. But again, get me off my soapbox, Don. Nobody wants to hear what I have to say about that. They just want to hear what I got to say about this money. All right. I think we need to stop believing you have to get your degree in 4 years. It's okay to pace yourself. I agree with that. That way you won't have to borrow as much. You won't have to borrow as much, or you can pay going. Yeah. So you can pay, you can pay as you go along, so you won't graduate with so much debt. I agree. Folks used to pay their way through college. So Allison's laughing at me. Why are you laughing at me? Just added Walmart to the portfolio. I spent so much money there. Yeah, why not? Walmart has actually done a great 360. Before they were super duper trash. They were just big with money and no real direction, but their new management team has really gotten it turned around. Doing my bald is the new sexy. All right now. LOL, Michael Jordan got cute when he went bald. You taking it way back. The initial price for term insurance is over when the term is over. But you can still continue coverage at a higher premium. Yes, Allison, that is true. Okay, good. I appreciate what you said about college and maturity. Have a college age child, it's a roller coaster. Absolutely. Listen, I didn't realize that the human brain doesn't like fully develop until you're like 25, 26, 27. But we giving these kids, these children, all these major responsibilities at 16 and 18 and 21. I mean, there's something to be said about that science. Thank you for following me on Instagram, Keisha. Appreciate you. But nobody wants to really have those deep conversations. Like I look at, again, I poke fun at the gurus, right? I really don't care about numbers in that way, right? I'm a human being, right? We all want attention and all that, but not really for me. But I look at all these gurus and they give like all these BS responses and answers, and folks be loving it. And I'm like, where's the nuance? Like life is not black and white. You know, life is nuanced. You know, I used to say back in the day, life isn't black and white. It's about the gray in the middle. I've since changed that. I said, life isn't black and white. It's truly about the color. And the colors represent opportunities and perspectives and vantage points that we can all kind of benefit from if you're open to do it. Problem is most people are only interested in debating. They don't want to have a real dialogue, right? And a good exchange of information and ideas. Shout out to Jimmy, because I do feel me and Jimmy do that, right? Jimmy said something the other day. We were going back and forth about something. He's like, I don't agree with nothing nobody says, or 100% of what everybody says. And the funny thing is, I say the same thing from even all my heroes, right? There is something I could find and say, oh, that's not accurate. Great example right now. Malcolm X's house nigger filled Negro, house Negro filled Negro analogy is historically inaccurate. And nobody would really take the time to really think about what's historically inaccurate about it. There were a lot of house Negroes that took part in riots. There are a lot of house Negroes that ground up glass and put it in masses. Supper, which I ain't got none yet. There's a lot of house Negroes that help the people. But when we speak so generally and we just lump everybody into one thing, we wind up demonizing a whole group of people that actually could be great advocates and allies for us. But again, y'all don't want to hear me talk about that. Y'all want to hear me talk about this money. So I agree with community, not really a community or a village. Not following you, Tiffany. Black wealth is made. Yes, Don. Yes. You know I believe that. You know, yeah, it's way more than money. It's money, it's health, it's education, it's so many more things. Going back to the Jews, right? The Jews make sure they have people in every position to make sure that they can be taken care of. Medicine, engineering, accounting, all of it. So they can be insular as a community. First time you come on live. Hi, Lori. How you doing? I hope this won't be your last time. Hopefully you'll come back again. We talk about a lot of stuff. Yeah, Don. I know it was definitely based on their mindset. Absolutely. but it still casts a whole group of black folks that say that they all have mindsets that love massa and not other black folks. And that's what I'm saying. It just lumped them all in, and that did light-skinned people a disservice, right? And I mean, we still say it now. It's like Uncle Tom, right? Uncle Tom wasn't really the bad guy, y'all, but we still use that as an analogy for people who love white people more than they love black people. But again, y'all don't want to hear me talk about that. That's not what we're talking about. Let's talk about this money. It's 9:30, y'all. It's almost 9:30. So any other questions? Did I miss any questions on? Oh, I got a question. Melody Alton, what do you think about the Franklin Dynatech Fund? FKD and X. FKD and X. I don't like it. Why? It's a mutual fund. I don't like mutual funds. I like ETFs. Melody Alton, I know you're on YouTube sometimes and rock with us. I'm going to pull that up. I'm going to pull that fund up. And I bet there is an ETF that probably matches that fund. So what do they cover? Dynatech, Franklin Dynatech Fund Class A. You take me back to my financial advisor days where I had to think about different class and shares because they have different expense ratios. This is definitely e-commerce heavy site, Amazon, Microsoft. So these are the top 10 holdings I'm reading off, y'all, for this fund. Amazon, Microsoft, Shopify, ServiceNow. I'm not familiar with ServiceNow. Alphabet, MasterCard, Visa, PayPal, Facebook, Viva Systems, I guess. Looks very, very tech heavy, very, very consumer staples. No, excuse me, consumer cyclicals heavy. You got some MasterCard, got some financials in there. MasterCard, PayPal. I'm trying to think of the I think it's IYK. The tech ETF that has a lot of those in there. But I'm not mad at that. As long as you're investing, right? It is a journey. It is not a sprint. It's more like a marathon. And we all have to grow at our own pace. But what about that mutual fund? Are you curious about? B Barbecue's back. Mid-Atlantic is back. VSLP is back. Shower Banks. Shower, I haven't forgotten about you. I need to do your question. Matter of fact, I'm going to do it this week in a separate video. Curtis Keys. Obiama's back. Belly Metz is here. How are you? Miss Keisha is here. How are you? Douglas is back. Can you explain it? Not it out. Can you please explain short and long-term capital gains? Sure. Who wants to talk about tax facts? All right, so short and long-term capital gains is a type of tax that the IRS levies on people that sell assets. Asset could be a stock, it could be a house, it could be a business. Typically, a short-term capital gain is something that you might have owned within a year, right? So let's say you bought it January 1 of 2020 and you sold it September 23rd of 2020 and you made $100,000 over everything you paid for that let's say property, right? Because I know I got some real estate people in here for that flip. So you made $100,000 with that. So you typically, depending on what your overall income is, you might have to pay a short-term tax on that. The government likes people who invest for the long term. It's typically better for the overall economy, right? Now, long term is a year plus. Anything over 1 year gets taxed at a long-term rate. So at a long-term rate, the tax rates are typically lower. You got to hold it longer, right? But that's the kind of the exchange. So, but the capital gains rates are actually very, very, very favorable for rich folks. Very, very, very favorable for people who make slaves out of their money. Can anybody tell me where that quote came from, where that line came from? Make slaves out of your money. I'm going to give somebody, that's going to be the contest today. I want to give somebody a free t-shirt if they can tell me, t-shirt or hoodie if they can tell me where that came from. And no Googling is allowed. Make slaves out of your money. All right, so Melanated Alton, I don't know if that helped you at all, but that's basically it. Again, if you sell stock, if you sell a house or a real estate property that you may have, or a real estate investment you may have, like flippers get hit with short-term capital gains tax a lot. And actually, there's some people who are flippers that get caught, to be totally honest, with flips that go longer than they expect, and they're in them for more than a year. Let me know. Nike Hill earnings this week. Loved it. Yes. Nike Hill earnings this week. I did a video a while ago that said Nike could become, I want to say, a $200 a share stock. I need to go back and look. Or was it 3? Was it 3? But Nike's got a great business. They got a great following. They have raving fans. So when you look at companies like a Nike, like an Apple, even like a Microsoft, like where they have a solid fan base or a solid customer base, people are going to come back time and time again and buy their stuff. I mean, there is an interview out there with Phil Knight, the founder of Nike, and Michael Rubenstein, who does the Rubenstein Report on Bloomberg. Yes, I watch Bloomberg a lot. Yes, folks, I'm a nerd. But what he said was, he says Nike is not a sneaker company. And this is great for anybody who is in business right now. Nike is not a sneaker company. Nike is a marketing company. Nike is a marketing company. That's what he said. And when you look at how Nike positions themselves, like look at the whole NFL thing in Kaepernick, right? Nike sells stuff to the NFL and they sell stuff to black folk that rock with Kaepernick. They just here for the profits. I ain't mad at them. I'm not mad at them. They're doing business. Point being, though, they're insulated. However, I will say this. You are starting to see Nike start positioning themselves in favor of black and brown people because they know the demographic in the United States is shifting darker, right? And so they are positioning themselves in advance to get after that money. So they're never lacking when it comes to their sale of their clothes. So I get it. I get it. And I'm trying to find out. It's so funny when I go on YouTube and I see there's another young lady. There's another young lady whose name is Kamari, spelled just like me. And she got YouTube on lock. She got way more followers and subscribers than me on YouTube. Okay, so yeah, I did. Ooh. All right, so let me see this here. I can't. Let me see here. So I asked, could Nike become a $200 stock? So people think I'm crazy sometimes. It's all good. It's all good. All right, did you get it first? Did you get it first? All right, yeah. So it says, can Colin Kaepernick push Nike stock to $200? And right now, Nike stock is at, I think, 127-ish. 120, yeah, 127. Kick butt. Made $2 billion more than what the street was estimating. So that's always impressive. Right. 127.11. So Tashiro Robinson, do me a favor. Send me your email address or DM me or text me because you're on YouTube, I see. And I will get you a shirt. So what is the entrepreneurial handbook? What's that, Ms. Rao? No, Philip Fisher, nope. Warren Buffett, nope. Don, I'm not sure about this. Was Breonna Taylor's family taking that statement in positive or negative? Not sure what you hitting at there, Don. Put it back in so I can get back at it. Yeah, so Mid-Atlantic Mac definitely killed it. Gerber Management, how are you? DJ0129, how are you? Rhoda Doctor, how are you? K Lander. J Rock, how are you? Namonti? I hope I'm saying your name right. Bookers, how are you? Mr. Bailey, quietly waiting. How are you? Oh, Frank, that's Frank. Frank, yo, you in here twice, huh? I appreciate you. Big Man Tech. Talk about what I want to talk about. Frank, you know me. You know, I can go off the rails a little bit. We be up in here having a black wolf revival and all it takes. Jeanette Wilson, how are you? Live on Sundays, how are you? Rotodoc, yeah, Sambo. Facts. So yeah, Sambo was actually the bad actor. So Sambo, we should be calling folks Sambos instead of Uncle Toms, but we like to perpetuate lies sometimes. NVIDIA. What about NVIDIA, Frank? Lola, hello. How are you? All right. So Malday Allen came back about his Dynatech fund. So the way the Dynatech fund was so tech heavy attracted me, but why more interest in ETFs over mutual funds? ETFs usually are cheaper in terms of fund cost. Mutual funds typically are a bit more. ETFs are a bit more transparent. Mutual funds typically only disclose their earnings or their portfolios once a quarter. So, oh yeah, NVIDIA is definitely a good stock. NVIDIA's been kicking butt all yeah, I think, Frank, didn't they merge, or am I seeing a proposed merger with NVIDIA and some other chip maker? I believe I saw a blurb about that. Yeah, so typically you can find an ETF that usually will have the makeup. Like if you look at Vanguard's ETFs, all Vanguard ETFs do is model their mutual funds. That's all they do. Yeah, they brought ARM. That's right. Yeah, I read a little bit about that. They were wondering about how the culture was going to react with all of that. Okay, so Ms. Tiffany says, as the Black community, we don't really act as a community or village as other cultures, like you're talking. Yes, that is definitely true, Tiffany. But we could change that, right? A lot of times we get so caught up in the past. And listen, I am a major history fan because I do believe if you don't study the past, you'll wind up repeating it. But also know that we create the future. We can create the future right here in the present. Right. So every week I tell y'all that I am not giving you investment recommendations, right? And I say past performance is not an indicator of future results. Past performance is not an indicator of future results. So if past performance is not a future indicator of future results when it comes to stocks, why can't that be for people? Now, I know people are more complex. I know it takes more, but I'm just saying it's possible, right? Lori Wise, next week, dinner at Mom's for all four of my kids, 19 to 35. You're saying things we need to hear. All right, cool. What mom cooking? Where you at, Lori? Where can I pull up at? I don't eat pork. Okay, Lori says replay it at the next dinner. You can replay it. You can definitely replay it. You can catch me either way, replay or live. If you get me live, you can. Hopefully I can get some questions in. They can get some questions in, excuse me. I will also say, I'll also say this, right? I'll also say this, right? Talk to your children about money, y'all. We talking about the Jews, so let's put some more stuff out there. Money is a part of their culture. Money is not a part of Black culture, at least in not from a wealthy perspective. It's there from a consumeristic standpoint. We always want to talk about the new car we got or the new shoes we got. What about the new stock you got? I did a video a couple months ago saying that if you own a pair of Jordans that usually cost 150 on up, and you don't own a pair of Nike stock or a share of Nike stock, which was like 80 or 90 bucks at the time, you're hustling backwards. Nike's at what now? 127. Typically, your person that's buying Jordans to wear Jordans, value is depreciating. It's going down, but the stock went up. So, we got to start thinking about the things that are going to keep on giving. I've always talked about stocks, but the reason I started talking more about fractional shares and just kind of being fervent about it is because, again, you could take $1. You could take $1 and invest in something, right? Before all this COVID nonsense, I would go to Starbucks a lot. And so one of the things that got me like showing what I'm buying in the stocks was just to show how easy it is to buy stocks. It's not just for the rich white guy in a gray suit, black tie, and white shirt. Everybody can do it. Everybody, right? So that's why I started to show that. And right, I started, well, one of them was Starbucks, right? That I started with. It wasn't the first one, but it was Starbucks. Because I said, you know what? How about I forego going to Starbucks for a week, which would be about roughly $25. And then I'll just buy $25 of Starbucks stock. So we got to start to replace some of our consumerism with some of our investing, right? Part of rebelling or being a rebel is rebelling against the programming of your oppressors. That's what it's really about. Our oppressors want us to watch commercials that 5,000 commercials get pumped into our brain every day, almost. They say about 5,000 ad impressions or 5,000 brand impressions. In 1973, they said it was 500. So it's exponentially grown to 5,000. So what does that do? Why do you feel the need every time you get paid, you got to spend some money? Why do you feel a need when you see the golden arcs, or the golden arches, to go buy some fries? It's a lot of psychology that's been done too. Corporations spend billions of dollars a year on psychology. At some point, you got to rebel against all that. You got to be okay with rebelling against all that. You got to be okay with saying, you know what, I ain't going to this party because all at this party, everybody's spending money on all the name brands. So at some point, you got to say, you know what, I'm gonna own some stuff. There's a video out on the Black Book Project page, right? On the Black Book Project page is a video of Tyler Perry, and he's talking about the importance of ownership. And the one thing he said was ownership changes everything, and it does. But as it relates to Black people in this country, I think we have to think about ownership, and we also have to think about protecting our ownership at various levels: physically, intellectually, spiritually, emotionally. We got to be at it. We got to have the whole combo, y'all. The whole combo. So, all right. Just got to notice that my next stock is in a buy and hold status. What does that mean? So doing what platform are you on? What brokerage do you use? Robert Brace, thank you for joining us on IG. What platform do you use? So what happens is on these platforms, what they'll do is they will share analyst research or analyst recommendations. So usually analysts will rate things a buy, a hold, or a sell. Sometimes they get a little different, but a buy is they're saying you should buy it. A hold is saying don't sell it, don't buy anymore, just hold it and wait and see. And the sells are saying don't sell. I'm saying a sell is saying to sell. Like when you see Jim Cramer, when he say sell, 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 right? When he hits that button, sell, 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 he's saying to sell it, right? Same thing for the analyst. So you can sell that. All right. I don't like anybody following analyst reports or analyst results. Why? Because a lot of times they're wrong. if you go back, and I guess maybe I'm biased and jaded, I remember the days of Enron. I remember the days of WorldCom, where all the analysts and auditors were all kind of in cahoots. And so that always left a bad taste in my mouth. And so I believe you do your own homework. You figure out if it's a good company, because you also have to realize that the analysts, when they're doing these results, they're based on really short time frames, sometimes a quarter, 6 months, maybe 18 months, if you get lucky, right? You hear them talk about market cycles, but that might not be your time frame. You might see a company that is out of favor right now that nobody likes. Like, everybody loves tech. Nobody's thinking about any of the boring companies. Those ham sandwiches that Warren Buffett talks about sometimes, that he wish he had a company that could run like a ham sandwich or be ran by a ham sandwich, right? Basically a company that just, is going to do what it's going to do, and you don't have to worry about it. It's got a good management team. It's got a good product. They got good marketing. They have a good moat. By the way, y'all should look up moats or economic moats. It's great, great reading if you want to understand investing for the long term. Big Man Tech, yeah, I'm sure you do love tech. You are the reason why I got into tech, right? So again, Frank comes on here every week and he likes to pick with me. I'm just joking. But Frank was an IT guy, and we were roommates together. And he said, "Here, read this book." And it was like a Windows 95 book at the time. And I read like the whole thing. It was like 400 or 500 pages. And then I got certified in Windows 95, and then I became what's called an MCSE, or Microsoft Certified Engineer. And Frank was making great money at the time, and I was making great money at the time. And then I got tired of it, and then I left. So I'm still good enough to understand tech to be dangerous, but I'm a little rusty. But doing that's what it means. It's just saying the analyst, some third party, is saying that it's a good time to buy the stock, a good time to sell the stock, a good time to hold the stock. No, Warren Buffett didn't say it. I don't know, I'm guessing. That's honest. All right, so Don Johnson saw that. Appreciate you, Don, for saying that. And yes, it was definitely on point. I'm a Tyler Perry, I guess, fanboy, and I don't care. I know a lot of people don't like him. I know a lot of people don't like Madea. I don't have a problem with Madea. If you go back in time, only men could act. So when you see black men acting, it's kind of like an extension of that. I know some people think it's a conspiracy. Some of it may be, right? I will give you that, but I think we add more into it, what it is. Madea is a character. You're acting, right? And when you're acting, you're playing make believe anyway. It's not real. That's not who the person is. But I like Madea because Madea is a real character in just about every black family that I know. Probably a lot of black families that you know. And while many people won't recognize this, Madea is always trying to impart some kind of value, some kind of family type thing. At least that's what I got from it. Daddy's Little Girls with Idris Elba is one of my favorite movies that Tyler Perry did. Talked about a single black father, kind of related to me, trying to, do right by his girls, do right by his kids, and had all kinds of problems. But he survived and he made it through. So were you saying the Entrepreneur Handbook was where that came from? But Toshira, I hope I'm saying it right. Toshira Robinson says the richest man in Babylon. So yes, in the richest man in Babylon, it says you should make slaves out of your money. So I asked y'all that question. I said I would give y'all a free t-shirt or a free sweatshirt, whoever answered that question. So Toshira, tell me if I'm saying your name correctly. So Lori Wild says, Tiffany, I like the way you think. All right, mom was at 126 earlier. I brought at 78. Oh, doing mine. Okay. Let me borrow $1. I'm trying, Tiffany. I'm trying. I'm getting there. Check all the comments. See how my people talk to me? They tell me what to do, boss me around. I'm supposed to be the one on camera here. I'm supposed to be the big shot. I'm supposed to be the man. But y'all boss me around like I'm nothing. I'm playing. All right, so Lori, people are always ready for a good dinner and movie night. All right, that's dope. Oh, you in Vegas? All right. I've been to Vegas once. Beautiful place. I didn't like it because my wife drugged me up and down the strip. I think I was at every daggone casino out there. And all the casinos had their own separate thing, which is dope. Right, so Don said the video was on point. Okay, TD Ameritrade, Fidelity, and Robinhood. Okay, so which one gave you the alert? And why are you in all three? Why all three doing mine? Oh, okay. Are the Airbnbs okay near the strip? My daughter's getting married out there next month. Congratulations, doing mine. That's dope. Congratulations to your daughter. Michael Dennis, how are you, sir? My man out in Arizona in the AZ. Right, Don. Some of his movies are spot on. Yeah. I guess I look at some of the commentary about some of the stuff we get mad about, and I'm just like, really? So he says, I don't have a problem with men in dresses. Tyler Perry, no one tripped when Flip Wilson. Yeah, Flip Wilson did it in the 60s and 70s, I think, right? Put on a dress. I'm dating myself. No, I'm right there with you. Okay, so Tashiro. All right, doing mine, not sure. Good for a good deal in the hotels. Business is low, and they're comping a lot. Yeah, I looked at some of the rates for Vegas. It didn't seem that sweet. Big Wayne 1, how are you? Yeah, Frank, you can definitely help me figure out the camera, but I changed the settings on my lighting, so I'm getting better lighting, and I'm thinking about ordering some different lights. Wait a minute, Michael, I thought you were in Arizona. Were you in Arizona one day when you were watching? So you in the DMV? My bad. That's way on the other side of the country. All right. So any other questions? P. Will, how are you? Thanks for joining. I see some of the numbers kind of dwindle down. I guess folks didn't like my Jewish commentary, my black commentary. It's all good. I'm not going to change my commentary. It's all good. All right, folks. So if anybody has any questions for me, put them in now. Say it now or forever hold your peace. All right. Just doing my look for a good deal. Yeah, but you know what, Tiffany? Everybody's version of truth is different. That's what I've learned as I get older. Don't want to put my eggs all in one basket. Really? Robinhood wants $75 for a transfer. That's crazy. Actually, a lot of brokerages want a transfer. So now I have all three. All right. I like TD the best out of all of them, but they're all good. All right. So listen, folks, let's wrap up. I hope I answered everyone's questions. If not, you know where I'll be. I'll be back here next Wednesday, 8 p.m. Same Rebel time, same Rebel channel. Do me a favor, share this with a loved one. Share this with somebody you're trying to help up level their financial game. And listen, I don't just do money. I talk about black stuff and money, right? The reason why I do all of this is because I care about the community and I want to see the community do better. I struggle with that concept sometimes because I think there's some other things we need first before the money, because a lot of times we get the money and then we just give the money away to all other cultures except our own. But yeah, I talk about it all. I see the interweaving of it all. I hope more begin to see the weaving of it all as well. Yes, doing my SECs on Robinhood back. I saw that. I didn't look in. Well, they're on Robinhood's back because they feel that they're extending margin to them a bit too easy. Margin to people too easy. Like there was a suicide with the one guy, and I won't say that was Robinhood's fault, but this is what happens when you get a bunch of overnight stock market gurus who don't understand the complexities and situations of people's individual situations. And they just say, hey, buy, sell. And they don't care. By the way, that's not a diss of Jim Cramer. Jim Cramer tells you just only invest with your mad money. Some folks just say go all in, and they won't even think twice to say, hey, I don't know your situation. I've seen people invest their last $500 in Bitcoin, the stock market, and some turnkey investment situations. I've seen people over the last couple months talk about pulling money out of the 401k plans to invest with people and to pay for coaching services. So I hate to see that because typically all of those things always turn out bad, typically, right? There's nothing wrong with getting rich slow, folks. Nothing at all. All right, folks, listen, I'm going to eat. I'm going to get my vittles now. Like I said, I'll be back next week, 8 p.m., same Rebel time, same Rebel channel. In the interim, Tashira, get with me. I want to get you your shirt. Is Lori still on? Not Lori. Leo Lady. Is Leo Lady still on? Tell Leo Lady, if Leo Lady watches, inbox me so I can get you your shirt as well. But all right, everybody, everyone have a great night. I'll see you all soon. Check me out on Saturday, Wealthy Conversations at 11:30. Have a good night, everybody. Bye-bye.